Hello, everyone. Hi. Hey, we're about to start. So if people in the back yang belum dapat duduk, bisa silakan, masih banyak tempat duduk yang tersedia di depan sini juga masih ada. We're starting soon. Or not soon, here, now. Okay, but hello everyone and welcome to BUIDLRS Lounge episode 4. So this is our 4th iteration of BUIDLRS Lounge. I just want to give a quick background about our event. So the idea of the event for BUIDLRS Lounge is to create a lounge or a community, a gathering of Web3 builders in Indonesia. Because we see that in Indonesia, there's a segregated amount, clusters, I guess, of developers where there's NFT developers, there's developers in Ethereum, developers in Cardano, Solana, and they're all segregated. And here in BUIDLRS Lounge, we're trying to just get a place going, get an ecosystem going of builders in Indonesia so that we can network together and also learn together. And hopefully we can grow Web3 culture and Web3 infrastructure together in Indonesia faster that way. So first of all, we want to say thank you to our sponsors, which is Saison Capital. This event is sponsored by Saison Capital, BRI Brimo, and also AWS. Huge thank you to them for sponsoring our event. This event won't be possible without them. And first on the agenda is a welcome speech by our CMO, Timotheus Martin.
All right. Hey guys, how are you guys doing? Everyone's doing well? Yeah? So as John mentioned, this is our 4th episode of BUIDLRS Lounge. The last episode when we did this, we were in Bali and Bitcoin price was just probably around 22,000. And when I said hi, everybody was like, hey, I'm good. But now I'm happy to see like all these smiley faces because I think we're back at 35,000 feet or 35,000 US dollars. So is there any Bitcoin maxes in the room? Anyone? But yeah, it's good to be back, and I think we are so back in the crypto community and Web3 community. Like John mentioned earlier, although this event is organized by Pintu, and I'm from Pintu, but this event is not about Pintu or about centralized exchange, but it's all about getting together with fellow builders, founders, developers, investors. There's a lot of VCs as well. Qin En is one of our most favorite and beloved VC in the room. So if you are a founders, you're a builders looking for VCs, or the other way around, you're looking to network, you're looking for portfolios, this is a great place to be. And so we're so happy to have you here. We started off with just around 30 to 40 people, yeah, in the first episode of BUIDLRS. Now it's like 250, right, guys? So I think we are growing from just community to become a cult. So yes. Happy that you guys here. Thank you once again. And thank you one more time to all the sponsors, BRI Mobile, Saison Capital, Ethereum Foundations, and AWS, of course. 2 guys are here. Woo! All right. I think I'm going to give it back to our host of the event, Jonathan, who will kickstart the sessions today. Thank you, everyone.
So today we have 2 sessions. The first panel would be about business models and value accruals in crypto. That will be moderated by Qin En from Saison Capital. And we also have 2 amazing panels that Qin En will soon introduce. So without further ado, Qin En, stage is yours.
Hello. All right, good evening, everyone. Selamat malam. My name is Qin En. I'm from Saison Capital. As you probably can guess now, I'm not Indonesian. Oh, hello. Yeah. Very excited to kind of be here tonight to moderate the first panel. Maybe just a very quick introduction of myself. I lead the Web3 investments at Saison Capital. We are a CVC that's backed by one of the largest Japanese financial institutions. And we are still actively investing in Web3. We haven't moved away to AI. And so really excited to kind of meet everyone today. But tonight it's not about me. It's really about discussing some of the most important topics we have. So without further ado, I would love to invite the two esteemed panelists who are actually building exciting things in the Web3 space on stage. First and foremost, can we have Lawrence from Nobi to come on up? And also Mario from Pyth Network. A round of applause for them, please. All right, we'll let them get settled down. And I have a list of questions here, but the way I like to do it is we all came for some entertainment, right? So let's get our money's worth, and let's start with a question that I don't have on my list and they did not prepare for. So I'm going to ask each of them to quickly introduce themselves and their company and tell us, how do you feel about the past week with the market going this way? So we'll start with you, Lawrence.
Okay. Hi, everyone. My name is Lawrence. I'm the CEO and founder of Nobi. We're a crypto firm. We build a crypto firm based in Indonesia, Jakarta. So we build different structured product based on staking, DeFi, and we also do like off-ramp, on-ramp using brokerage. So, I mean, we do a lot of different things. So we innovate by basically providing values to all the crypto investors, helping them to invest in a meaningful way and safe. And your question was actually, how do I feel? Because the price goes up, like what do I feel? Because I think I think my feeling about this is just like, imagine yourself is walking in the desert, and then suddenly there's a rain, there's a big cloud that provides water for you. So I think now that's what I currently feel, right? So, and I think when that happens, we see a lot of reactions from the community, from your friends, from your family, people who used to love crypto but they forgot about it. Now they starts to come back. And I think that's a good reminder about why we believe in crypto, why we are here in the first place. But at the same time, I don't think that this rain will be here for a long period of time. But now it's just a time for us to, at least for me, to starts the discussion again, starts to reconnect with old friends that. Here we are, we're building this, we love crypto, and, this is the impact that we can do. And, it's just a time for us to remind ourselves again, why we love this space.
Awesome. I love that. So a desert, rain has come, and it's either a great thing because you have water, or you're like, what the hell, right? I came here for the desert and it's raining. So I love that. And also, by the way, it's true, right? So many people are taking note of this. I saw just a stat, how to buy Bitcoin 10x in search, right, on Google. So awesome. All right, Mario, over to you. A quick introduction of yourself, and would love to understand, how do you feel?
Yeah. So hello everyone. So my name is Mario. So I've worked for the Pyth Network, which is the largest. We are pretty much the largest first-party Oracle network, serving more than 35 different blockchains, and also at the same time 200 different applications. So I work on the Pyth Network more on the growth in strategy side. So meaning that we work more on marketing, BD, and so on and so forth. As for pretty much what I felt over the past few weeks is gonna be like, I think pretty much echoing what Lawrence has said. So you're gonna be like, oh, now it's gonna be something like it's completely real. Previously with 5K, like everyone is really down about it. Solana, I think, was trading at about $20. Ethereum was trading at, I think, 1,500 or something. Yeah, but now it's like with all of the very, very, I guess, encouraging and also at the same time very bullish news coming directly from the US with the Bitcoin ETF and so on and so forth. I think it's going to be a really, really exciting few weeks and months, and yeah, can't wait to see how this plays out eventually in the future.
Awesome. Now, I want to promise the audience that tonight it's not about market commentary. We have some really smart people in the audience who can probably do that better. But really tonight we're here from a builder's lens, right? And I think one of the key issues that happens in Web3, it's really business models, right? How do you capture value? Because yes, there's a lot of transactions, a lot of money that's happening, but how do you capture some of that to form a business, right? So kind of the first question I would love to pose to our panelists, it's, do you think in crypto, and perhaps let's start with centralized exchanges, is it just a race to the bottom? Is it about who can offer the cheapest prices, and that's how you win? I'm curious to hear what you guys think, starting with you, Lawrence.
Well, of course, fee is probably, one of the most important factor when people decide, which exchange to use, right? There are other things too, like reliability, how easy it is to use, and then we see that, what are the value-added service that you can provide, right? So we see different features, like staking, and then wallets, like how secure it is, and then you see like the people behind it, and then how many coins it actually provide. Those are the little details that I think in the end will matters for the users, right? Maybe for like the big volume guys, I guess fees will be the top most important things. But I think for most people, I don't think fees is gonna be like the most important things in when they decided like which exchange to use, right? So and then especially I think nowadays we see different platforms and they all pretty much offer similar kind of fee structure, and I think it's good for the customer, right? Because then the customer they don't need to look at the fees, but they need to look at the other things, and then it will innovation will have to happen. Like otherwise, then the customer will not go to you.
Okay, before we move to Mario, I want to push it a little further. I hear you that things like the variety of coins, the customer experience, all of that matters. But what if your customers are not willing to pay for it? Because we Asians are cheap, right?
Yeah.
We just want good things for free. So what's your response to that?
Well, in the end, then you have to communicate that with the users, right? And I think, especially talk about the Indonesian market, we have so many people. I think the market is big enough to have like different spectrum of the customer. Some customers actually maybe, like I said, like big volume traders will go to, for example, will go to exchange with the most advanced charting tools, for example, or maybe they will want to have the deepest liquidity, right? Cheapest fee, those kind of things, right? But there are probably other spectrums who wants to have like a very easy, simple experience, and there are probably people who are in between, right? So they don't really care. They just want to, have one platform that they can actually trust, right? So, I mean, and I think that's the beauty of our crypto, right? I think, if we compare with traditional finance, we have crypto. You have so many options. You can go, you can go simple. You can go weird. You can go hard. It depends on what you want, right? So,
Got it. Thanks for that. All right, Mario.
So I think the way I see it, I think there are two different things that we need to discuss here. I think number one is definitely fees do matter at the end of the day, but at the same time, I think they matter for different kind of people that trade within that specific exchange, right? For example, I think you're talking about maybe, let's say, for example, more of a, I guess, retail focused kind of like traders, where I think fees really matter to them because they trade in a small volume, kind of like, so pretty much small volume, they generate small volume, and as a result, I think fees accrue to them over time, and it's gonna hit their, I guess, overall bottom line more. But at the same time, I think for, I guess, the bigger kind of like institutional kind of like traders, market makers, all of these people, I guess, even though fees matter to them as well, but the added services that you can get from many of these exchanges, they also matter, because I really believe that at the end of the day, exchanges are also relationships business, where you need to basically establish that trust and also at the same time maintain that kind of relationship for you to actually grow as an exchange. And you don't really actually are able to grow as a business simply by just collecting all the retail traders. You need to also collect all the institutional traders, which is basically what Binance, OKX, pretty much all of these big players that are already in the space are doing right now. They're collecting not only the retail, which is maybe they have a lot of whales, a lot of retail traders that are actually doing like real number of volume, but at the same time, the institutionals themselves, they're also doing massive amounts of volume. And by adding all of these kind of like different services, relationships, maintaining VIPs and so on and so forth, you're going to be able to generate more and more volume out of them, and that's why they're going to be choosing you at the end of the day. So yeah, this is pretty much what my stance is.
Got it. So I hear from both Lawrence and Mario the themes of ecosystem, building more and more services. But then doesn't that lead to a situation where you start to become a walled garden, right? Just like how Grab or Gojek started with a transport service, then now they have a wallet, they have delivery, they have massage, and it's like pretty much everything just happens in it. And so what it really means is you kill off everyone else, right? And we are already starting to see that, right? Uniswap started with a DEX, but then they launched their wallet, and then they launched a whole bunch of stuff. MetaMask, right? Just 2 months back, launched Snaps. So what used to be a Ethereum or EVM wallet, you can just add on stuff and be a wallet for every ecosystem and just so many things, right? So then it becomes harder for the new guys to come in. I'm curious about how you think about that.
Yeah, so I think I'm gonna take this one first, because I think this is a topic really close to my heart as well, because I use most of these apps as well. I think as many of you guys are using here. So MetaMask, I think the way that they're doing it is, I think, really, really, I guess, really cool in the sense that they're basically expanding from their services, which is the wallet that they originally created, and they're doing like massive dominance there. But at the same time, now they're expanding to all of these other verticals that are basically, they're trying to explore, but at the same time, I think what's really cool about them is that they know what they're capable of, which is basically the wallet service, and they want to make sure that they can retain as many people as possible within that wallet service. So I'm not sure if you guys are actually following as well, but if you actually take a look into some of our Web2 counterparts, such as the Gojeks, the Grabs, the Shopees that that Qin En mentioned just now, all of these players actually started from one original mode, which is, if you guys take a look at the Gojek, Grab, they started out as ride-sharing app, and then you look at Shopee as well. They do pretty much e-commerce, and then they expanded to other types of services as well. So what I'm seeing, I think that's going to be happening similarly to crypto, at least, is that players that actually originated from one typical vertical, they dominate in that pretty much that vertical, and then they try to expand to that service. So yeah, so pretty much I think the way it's supposed to be, I think for a lot of these, I guess, quote unquote, wannabe super apps, is that number one, they need to make sure that they are able to dominate within their own respective vertical, and then afterwards, once they feel that they have enough lead within the rest of the competition, then they're going to be wanting to start expanding to other types of services as well. But yeah, I think back to the point I was trying to make earlier is that people will definitely or eventually come back for the original mode that all of these, I guess, originally apps was pretty much trying to create in the first place, right? So people, the way they know MetaMask is by using their wallet. Uniswap, because of they're using their DEX and so on and so forth. So I still believe that at the end of the day, the original mode will still thrive, and all of these added services or the expansions to other verticals are just going to be very complementary, but at the same time won't take the original business of the original modes. So yeah.
Got it. So very much about finding that moat, that advantage, right, and doubling down on it. Anything to add, Lawrence, to that?
I think super app is cool. Being Asian, I think we all love super apps. And walled garden, I think walled garden is fine, as long as the garden is great, right? It provides value for the people inside that garden, and two, you still remember that, in this example, this is you're comparing we're talking about the Uniswap wallet, right? Wallet is an interface to blockchain, basically, right? So as long as you don't forget that, an interface to blockchain have to be open and allows people to get out from that walled garden, and it should be fine, right? Because the way I see it, wallet is just like, phone, right? You have Android phone, you have iPhone. Both provides a similar kind of service. One is more open than the other, but you can communicate to each other, and some people prefer it, curated, like in iOS, in iPhone. Some people prefer it to be open, right? Just like an Android. So I think in the end it should be fine, right? As long as you don't forget about those two things I mentioned earlier.
Yeah. I like the analogy of Apple versus Android, right? Like it's really built for different audiences on what they're looking for. But let's face it also, right? I mean, Grab and Gojek are huge successes in their own right, but they are also very well known and very public about being very unprofitable businesses, right? And a big part of why they're unprofitable is they need to burn money to subsidize, to encourage people to adopt their services, right? Definitely more so in the early days, maybe less so now. Are we going to face the same thing in Web3, where it turns out that we have to subsidize people coming in, we have to subsidize mass adoption, and what that means is, for a long time, business models are not going to be profitable.
All right, so I think that's just how it works in real life, I guess. Like most people love freebies. We have discussion earlier about how everyone love airdrops, right? Like in Web3 spaces, people talks about airdrops all the time. It doesn't matter whether you're a whale or whether you're a retail, whether you're new in the space, whether you're old in the space, everybody love airdrops. When you say that, hey, there's an airdrop, there's an Arbitrum airdrop, you should check your wallet. Everyone will get excited and check it, right? And and previously, Pyth also have the same kind of airdrop programs, right? So, and I think and that's part of marketing, right? So how you market yourself, right? And I think some business are, have to spend more than the other, right? So we see companies like Gojek in Web2, and Grab who basically subsidize everything. And then in Web3, we have like companies like Uniswap who I think in the beginning they don't charge any fee, and then they start charging, right? And now they start charging more fees, right? And and those are also common, right? So and then I think when they reach certain numbers, certain adoptions, then they will start to tinkering about whether they have to change the fee structure, or whether they have to start reducing the incentive, or completely throwing all the incentives out from the picture, and I think that's just part of a business, Web2 or Web3, same thing.
Yeah. So I think to piggyback on what Lawrence has said, so I think I agree on some points, but I think at the same time, as a business, I think in Web3 in particular, we are basically so accustomed to subsidizing all of the basically quote unquote growth strategies through what you call as airdrops, or using the tokens as pretty much the main strategy to attract growth for the protocols. But I guess at the same time, if you actually take a look into some of the protocols that we just discussed earlier, Uniswap, for example, they are actually pretty profitable without their own token. So I think it really depends on the kind of businesses that you set up and you started with, from the start. And I think it also depends on whether you're gonna be, whether your management team or basically the Uniswap labs or whatever the entity is going to be, is set pretty much going to be on, whether this protocol or the company itself should make money in the future, not just relying on the tokens and so on and so forth. So I think it really depends on how you actually strategize as a business and also at the same time as a protocol.
Got it. And maybe I have a specific question for you, Mario, right? Which is tokens, airdrops gets us all excited, but it really works for more sort of like B2C, business to consumer apps, right? Now, my understanding of what Pyth does is more of a B2B, and I think there are many people over here that are building like B2B solutions in Web3. Now, how do you think about the go-to-market for these B2B in Web3? Because it's not like we have Google Ads or LinkedIn to kind of run. And it's also not like the old days where you can hire a telemarketer to pick up the phone and ring 100 companies, right? Like it's fundamentally very different. So I'm in terms of how finding the right customers and partners looks like for you guys.
Yeah, so pretty much, I think what you mentioned there is 100% correct. So I guess airdrops is, I guess, more catered towards the B2C kind of audience where you have a lot of customers, you have a lot of people that have been using, let's say, specific apps, so on and so forth. They're going to be eligible for an airdrop and so on and so forth. But I guess from our perspective, because we are a more, I guess, B2B kind of infrastructure player, and we pretty much serve with all the DeFi players. I think we right now bought 48 or 50% of the total perplexes volume in the market. That includes pretty much all the big names in the space, Quenza, Polynomial, pretty much all the synthetic front ends, and also at the same time, perpetual dexes like HMX, Vela, and pretty much all these names. But back to the point is that B2B players can actually also be kind of creative as to how they approach airdrops, right? If you actually take a look into some of our, I guess, contemporaries in, I guess, the L2s or the L1 foundations, they're actually doing a pretty, I guess, interesting strategies with regards to how they approach their token and pretty much do, I guess, the BD strategies from that point on. So they're going to be doing like something like grants, maybe to, specific kind of like applications, like we're seeing it like live at this moment with the short-term incentive program done by Arbitrum, which is basically trying to incentivize all of the usage that's happening on Arbitrum through, let's say, the specific apps like GMX, pretty much Vela, all of these other players as well. I think from our perspective, we can also pretty much try to do these kind of things as well. So, trying to go through grants, so on and so forth, basically utilizing the tokens in such a way that you're able to retain these players and make sure that they're going to be using your services on top of, the original product that you actually bring into the market, which is, in our case, it's going to be the Oracle. So yeah, I think there are plenty of ways for you to kind of like approach kind of like the B2B growth strategies for us, it's going to be, probably going to be something similar to, drawing some comparisons to the L2 foundations and the alternatives L1 and so on and so forth. So yeah.
Got it. And Lawrence, I think earlier kind of want to bring both points together, which is you mentioned it's more than just price. It's all about the value-added services, about understanding what the user's problems are. How do you think of communicating that at Nobi? Because an airdrop does a pretty terrible job of doing that, right? Like an airdrop is just, hey, free money, take it. It doesn't really convey the value proposition of what you're building. So I guess in your context, what does conveying value look like?
Okay, so airdrop, airdrop is terrible in that aspect, I guess. Like some people, they just go look for as many airdrops as possible, and then the moment they get it, then it's just a moment of when they can sell it, I guess, right? And then they will never come back. They might or might not remember. It's a 50-50 chance. Right? So in terms of conveying value, I don't think airdrops is a great tool for that. I think in the end, it's just building awareness, right? And then what's more important is after you do the airdrop, then what, right? So let's say airdrop is probably a tool it's like a megaphone that can blast your message to all EVM compatible wallet out there, right? So that's basically what airdrop is. But like then once they get that airdrop, maybe they have to claim it in a page, for example. That's probably the only moment where you can communicate with these people, right? And if you can convert that to become your user, then that's great. But if they're not, then you lose that moment, because after they claim it, then they probably will never come back, right? So, and as in Nobi, I think we deal with a lot of protocols, we deal with a lot of DeFi's, and we got exposed to I think there are there are instances where we know we know a new protocols of a new DeFi just because they have this moment of airdrops where everyone starts talking about it, right? And yeah, I think that's it's still true for everything. I think now we still see that airdrop is probably the true Web3 way of getting as many people as possible.
Got it. I think one thing that a lot of the builders here will realize, it's also it takes time, it takes experiments to figure out what's the right strategies, right? And what it means is it also takes money, right? It takes, you need to keep the lights on. So I feel like builders today in Web3 need to be resourceful. So I'm going to ask each of you, what does resourceful look like? Because let's face it, right? Venture funding is slowing down, right? A lot of VCs have moved away from Web3 and are not even taking any of those pitch meetings. Saison Capital is one of the rare ones that we are still. So talk to us if you are. Sorry, that's a commercial break. But then even for airdrops, right? Like, I mean, besides this short-term spike, we also see people becoming a lot more skeptical and about doing initial ICOs or token raises. So basically, what I'm trying to say, it's getting that money, getting the resources to communicate your message, to grow. It's a lot harder than it used to be. What kind of advice would you have to some of the builders out there who might just be starting their journey?
I guess I'm just gonna go with I think first take then. So I think for us personally, I think it's pretty much getting into the trenches with all the protocols. I think as a builder, you need to establish that connection and make sure that you are in pretty much in everywhere. You network with all these kind of like the Web3 events that we're actually having here. You go to conferences, you actually meet a lot of people from different kinds of protocols, so on and so forth. And basically establishing that connection with all of these people in real life, so that later when you're actually building your own protocol and basically trying to make it in the industry as well, these people know you in person, and that establishment of connection, I think it's just going to be much firmer, as opposed to you haven't met in real life. You're just basically connecting through Telegram and Discord and so on and so forth. And it's just different. Like when you have this kind of physical connection, especially when I'm seeing all of these people just gathering here, basically trying to connect with one another, I think it just creates a different kind of like magic. And also at the same time, I guess it's also very, very cool to see that, people actually don't just stay in front of their laptops and computers all day, every day, chatting on Telegram and Discord, and basically don't really want to interact. I think that's why I think one of the things that as a founder, or basically as basically whatever that you want to do in DeFi or Web3 or whatever the case may be in crypto, I think establishing that connection early on and going to all of these, I think it's physical events, and actually meeting all the founders or meeting all the key players in the industry, I think it's going to be very important, and it's going to be setting you apart from the rest of the competition. I think that's what I believe.
Thanks a lot, Mario. Lawrence?
Yeah, I mean, it should be pretty simple, right? So you should start by talking to your potential customer. I think that's the old wisdom that I still think still true. If you're a builder, you should talk to your potential customer as early as possible. Even if you don't have the product yet, maybe you have a concept, maybe you have an idea, then you should start to connect with the customer as early as possible, because you can never assume that all your assumptions are true, right? So you talk and you meet offline, online. I think COVID teach us about, that about community can happen online and offline. And, the world is actually smaller than before. You can, and I think especially in Web3, community is really important. And now we have like tools like Discord, you have tools like Telegram, and that's where you meet people, and, event like this, this is where you meet people. And then you gather those suggestions, you gather those feedbacks, try to read between the line, and, then you keep coming back, right? So you keep coming back, you keep asking, try to ask all the right questions, and eventually that, whether or not this is a product you want to make, or whether or not this is a product that you can, can scale, or people will be willing to pay for it, right? So I think that's what, as a builder, I think that's what I think being resourceful means, being able to, understand your customer.
Got it. So really put yourself out there and go out and talk to your target customers. That's really great advice. All right, I think you've heard enough from us from now. I would like to just open up to the floor to see if there's any questions for our esteemed panelists up here around business models and value accrual. This is your chance, so we are all here for you. Okay, maybe folks are too shy to say, completely understand, because I'll never do the same in your shoes. But maybe I guess I can just wrap up with kind of one question, one last question, right? Unless there's anyone else. Okay, then I'll wrap up with my question. Now, most of us here, with the exception of people like myself, who are not from Indonesia, but most of us here are local, right? Or at least you're based over here. So it's natural that if you're building something in Web3, you start by thinking, what can I build for Indonesia? So my question to both these panelists tonight, as to wrap things up, it's what are some business models that builders or founders can consider building for the Indonesia market? What gets you excited?
Okay, maybe I should start first, I guess, before you steal my idea. But I think there's still a lot of potentials that can be done in the market, right? We see, some are global problems, things like wallet, for example, right? I guess people here, all know about MetaMask and all know about ledgers, Trust Wallet, and all the new ones like Uniswap wallets or all the other things, right? So those are like global wallet, basically, right? Does it need a local solution? Maybe, but that's something that I'm also curious, whether or not, wallet is wallet needs a local solutions, right? So with the kind of like, I don't know, maybe like localizations like such as language, or maybe like features that only matters for Indonesians. I don't know, but I think that's something that I think can be interesting to solve, and it's actually the gateway to Web3, right?
Got it. Wallets. All right, Mario.
So I'm gonna take a different route from Lawrence here. I think one of the biggest, untapped potential that we actually have, I guess, is real-world assets. In particular, I think lending, because I don't know if you are actually seeing what's happening in the market over the past few years, but especially in our Web2 counterparts, P2P lending especially has been extremely huge and extremely, I think, it's quote unquote successful in most parts of Indonesia. You basically can make sure that you quote unquote banking all of these people that were previously unbanked, and pretty much bring them into the financial inclusion, and pretty much they can access all the financial markets. And it's going to be very interesting to see, if the Web3 counterparts, or basically us builders in Indonesia, can basically replicate the same thing that's actually happening in the Web2 counterparts, right? So you're seeing that this massive, P2P lending kind of like frenzy that's happening in Indonesia, pretty much to the point where you're gonna start seeing, I guess, unregulated P2P lending platforms and basically offering like crazy APRs and so on and so forth. I'm just basically gonna be very curious to see whether there's gonna be enough actually market for this, but I'm pretty sure that's gonna be like a lot of people that's gonna be very excited for this. And yeah, I think it just hasn't happened yet because I think the market as a builders community, I don't think we have found like the actual product market fit for a lot of these builders. But I think once someone or basically anyone from this community or maybe in outside of this event can basically figure it out, I think it's going to be a very untapped, very lucrative market to be in. So yeah, I think that's RW lending is going to be one of the biggest, I think, in Indonesia.
Got it. Well, with that, we've wrapped up the first panel. Please join me to give a warm round of applause to Lawrence and Mario for their generous sharing. Thank you, everyone.
All right. Free T-shirts, anyone? So I just want to light up the mood a bit. Don't get too serious, guys. So team, can we show up the Kahoot? Okay. So just to lighten up the mood, 5 quick questions for 3 winners. So there's 3 T-shirts here. So we'll see. It's a little bit of a crypto trivia. So we'll wait for 1 minute. How about that? 1 minute. I'm gonna time you guys. Siapa yang bingung karena bahasa Inggris? "20 seconds. Prabu. All right, 3, 2, 1. Okay, let's start. First question. Who is the richest guy in crypto? Oh, can you see? SBF is the right answer. Well, that's a long timer. CZ is the right answer. All right, next. Rio at first place, Hilmi, and then Aldo. Okay, next. Prabowo, Prabowo number 5. What is Cardano's language? This is programming language. What is Cardano's programming language? Hi, YOLO. How geeky are you guys? What is Cardano's programming language? Plutus. Plutus is the right answer. Next. That's a trick question, right? Ooh, Aldo. Is that Aldo? Okay, next. Giving. This is okay, next. Top NFT sales volume of all time. So the whole project. Top NFT sales volume of all time. Axie Infinity, Boy Yacht Club, NBA Top Shot, CryptoPunks. Axie Infinity. Actually by a long shot. Top NFT sales volume of all time. So next, I got you there. Ooh, somebody, Jakarta Panas. Next. How old was Vitalik Buterin when he created Ethereum? How old is Vitalik Buterin when he created Ethereum? Answer is 21. He was 21. If it's wrong, blame Google. I Googled this. Next. Ooh, bravo, let's go. Next. Next Bitcoin halving will be on block number. What number? Which block number is the next Bitcoin halving? How geeky are you? Answer is 840,000. Okay, so that's the last question. Let's see who the winners are. So top three. Gin, Kufira, and I hope it's Prabhu. Oh man, what happened to Prabhu? Okay. Oh, Prabhu is number 4. Okay, so Jakarta Panas. So the winners, can you come forward? Jakarta Panas, Kufira, and Gin. Is it Gini? Yeah, come. Or I guess Gini is a Pintu employee, so let's disqualify her. Let's call up Prabhu. Where's Prabhu? Jakarta Panas. Anybody? Anybody want to claim the prizes here? You have to come forward. Ada nggak? Oh, come. Anybody else? Jakarta Panas? Aku dong. Mana di Jakarta Panas? Kufira? Oh, you're Kufira. Congratulations. Awesome. Jakarta Panas. And then Prabowo, ada yang mengaku jadi Prabowo tadi? Siapa yang tadi jadi Prabowo? Gak ada yang ngaku ya? Hah? Trainer? Oh bukan. Terus? Oke, gini aja, gini. Okay, let's take a picture here. Oh. All right, round of applause for the quiz winners. Now, we're going to continue on to our second session, guys. We're going to talk about zero knowledge proof for decentralized identity applications. So I think this is going to be a very neat conversation. So without further ado, I want to invite Marco as the moderator for this panel, and he will introduce the panelists.
Check, hello. All right, so first of all, thanks, John, for the intro. I hope everybody is still awake. I was sensing that people are starting to get a bit tired, and I know that this next topic might be quite technical, but fear not, our panelists and speakers are going to be able to explain these concepts in an engaging way to make sure that you know why these are important. So I guess before I introduce my panelists, just a quick intro about myself. My name is Marco. I'm the research director at Digital Asset Research. We are a crypto data firm based in New York that helps traditional financial firms get into the crypto space. But anyway, similar to what Qin En said in the first panel, tonight is not about me. So without further ado, I want to introduce my esteemed panelists, Dimitri and Kevin. Let's go. All right, so we will let them get settled in first. Before we start, I do want to expand on one more context because I did see some non-crypto people here, some venture capitalists that invest in sector agnostic. I'm not trying to take too much time for me to speak myself, but ZK is a technology that is important, even if you're not in crypto. It's been implemented outside of crypto for airports, for securities, and for other aspects. But in crypto, it's near and dear to our hearts. So that's why we're also talking about this topic and why, again, just to want to convince the audience why it's an exciting and important topic to talk about. Without further ado, I would let the panelists to introduce themselves. We can start with Dimitri.
Hi, everyone. My name is Dimitri. I am the CTO of Copra Finance. And just to give a bit of background of the project, we are trying to build a bond protocol for small protocols to raise liquidity in the market and also to offer fixed yields for lenders.
And next, Kevin.
Hey everyone, nice to meet you. So I'm Kevin, currently a Web3 engineer in OKX. So basically for DeFi products in OKX, we have like NFT marketplace, wallet, as well as integration with the DeFi protocols. So I'm mainly working on the integration with like DeFi protocols like Lido staking, Uniswap v2, v3, and many others investment protocols.
First of all, if the audio voice isn't high enough, please let us know by raising your hands. So we'll speak closer to the mic. Right off the bat, let's talk about what the topic itself means. So I want to ask this question to you, Kevin. What is ZKP, if you can explain from a high level to our audience, and why is it important?
Cool, yeah. So ZK knowledge is basically like a way for a prover to claim that statement is true without actually revealing the actual information to the verifier. So basically, I think a good example would be like the Finding Waldo puzzle, when you have like tons of people in the picture, and then there is like Waldo in like one of them, right? And then using ZK, which is something like a prover will take a like scissor and then actually cut a particular piece of Waldo and then show it to the verifier. So in this case, the verifier knows that the prover indeed know the exact location of Waldo without revealing the exact particular location to Waldo to the verifier. And then you might say that on the first try, then the prover might be lucky, right? But ZK can be done iteratively to make sure that the probability that the prover guess luckily like becomes significantly and exponentially lower and lower every try.
Got it. So you're saying it's a way to prove something without showing what it actually is. So I want now to segue into you, Dimitri. With that technology, what concepts are you excited about?
Yeah, I think there are two big concepts that I'm very excited about. The first is around scalability, because I think in the future, if crypto were to achieve mainstream adoption, we would need to be able to scale the system, even in a bull market. And we're all degens here. Like in bull markets, we do all our things. We try to make as much money. We pump NFTs. So, we want to be able to support this, even in
not financial advice.
Yeah, not financial advice at all. Yeah. But so with ZK proofs, it's pretty interesting because, as Kevin said, we are able to prove things without actually revealing the data. And what that means is we can create systems that allow us to perform the majority of computation off-chain and only prove that those transactions are valid on-chain. And this proof is a lot smaller than the actual transaction, so we're able to scale the system multiple factors. The second interesting concept I want to talk about is this idea of decentralized on-chain identity. Because if we believe in this future world where everything is governed by on-chain code and smart contracts, then the code needs to be able to access user data as well. Now, with ZK proofs, we're able to do this because users are now able to prove certain conditions and information about themselves without actually revealing that data itself.
Got it. So maybe to make the explanations much more practical, I'm going to jump around a bit and these questions are directed to both of you, but what sort of maybe even practical use cases that can be, it might be in crypto, it might be outside of crypto, but what kind of practical use cases of ZK that you have seen in the past couple of years?
Yeah, I think one of the really big practical implementation is ZK rollups. As we know, like Ethereum right now is heavily congested with traffic, especially right now, like the past 2-3 days, the market has been slowly become bullish. We see the gas fee going up, and we now see that the ZK rollups become more relevant and relevant in the way that it is able to scale Ethereum in such a way that by ZK EVM, calculating all the transaction computation and storage off chain of the Ethereum mainnet, and then after that they will send to the mainnet the ZK validity, which the ZK which a mainnet will actually acknowledge if it's verified as a valid transaction. So I think to sum it up, it's really helpful to scale Ethereum to a whole new level.
I think for me, one of the biggest use cases of ZKs in decentralized identity is the idea of under-collateralized lending crypto. Today, we see a lot of over-collateralized lending, and this makes sense because you as a lender, you would not feel comfortable lending to someone you know basically nothing about. But with ZK proofs and allowing users to prove things about themselves, we can start to build under-collateralized lending protocols. And one example of this is Chainlink. They actually did a POC with Teller Finance, where they integrated their product with Plaid, which is basically in the US, it's a payment processor. So because of this, they were able to create a more capital efficient system where borrowers can basically get instantaneous loans as long as they can prove certain things about themselves, such as like being able to prove that they earn above a certain amount or have a certain amount of money in their bank account.
Got it. So I want to segue into why ZKP as a technology is positive from, and perhaps this is also a question directed to both of you. What's sort of like the pros and cons, and how can it protect our data and privacy and safety in a much more digitized world? I guess this might sound like a bit of a leading questions, but we've been seeing a lot of hacks from government databases. I think in Indo, that's very, very common. But how can we use this technology to prove our identity without truly revealing it? And what sort of, I guess like the question is, what sort of safety and benefit to privacy that you're seeing from this technology?
Yeah, I think with the decentralized identity concept, right? Actually, there will be like 3-party. Mainly, the first is the identity issuer. The second one is the identity holder, which is the wallet, the user wallet in this case. And then the last one will be the verifier. So with the ZKP, right, the identity issuer will actually issue a verifiable credentials to the wallet, which the wallet now will have the control of the data. And then when the user talking to the decentralized application, let's say in this case, the on-chain lending system, right? They will be able to prove a certain facts. Let's say, for example, they are earning certain amount of money per month, and then the decentralized application will be able to verify the particular facts and then give the loan accordingly. And then how does the ZKP enhance the security, such as when you talk about the user will be talking directly to the dApps itself. So even the identity issuer could be a government in this case, is not be able to know which dApps that the user are interacting with. So in this case, if you see the data propagation is basically being stored centralizedly in the identity issuer. And then this is enhanced security because the data now is not denormalized into many platforms. Like in the Web2 world, we have Google as a login, Facebook. They know every exact thing that you are going to, like some funny website, then they will know about it, right?
I think for me, one of the biggest positives with ZKs is that it allows us to own our data. So this idea of data ownership of what is about us. So in the traditional Web2 space, when we interact with these big Web2 companies, really we are giving them all our personal data, and they're storing it in a centralized database where we don't know what's happening to it, and they are free to share it. With ZKs though, and all this blockchain decentralized identity, we retain full ownership of our data, and more so, we are able to share particular pieces of information with these dApps, and we know exactly what we're sharing. And we're not actually sharing the actual data, but instead we are just proving certain facts that are true about us.
Awesome. All right. So I want to pivot into just talking more about the concept of decentralized identity, because after all, it's the topic for the day. As some of us know, or I assume all of us know, the blockchain is an open source and transparent system. You can see every financial movements. You can see your friend's salary, technically, right? And that's not necessarily something that people are always open to. So that's why with ZKP, we're starting to see more and more projects trying to address this information of making sure that you're able to still do transactions while keeping your privacy. I want to segue into, all of this sounds great, right? It sounds great. It seems that if we do not need to give our information to the big tech companies, to the government, but while at the same time they can verify and we can still get all the benefits, it seems great, but what sort of regulatory challenges that both of you see might be coming from either the governments or from global institutions? One example is that we have seen Polygon, one of the largest blockchain, is trying to do a ZK-based KYC system, right? So instead of giving the governments your data, they're just going to say, through cryptography, we are going to prove that Michael is Michael without Michael needing to share all of Michael's passports and identification number. That is still a work in progress. And obviously, there's going to be a lot of pushback from the incumbents. But I guess, I know might be a tough question. How do you see this play out? And what sort of the challenges that you are forecasting?
I think in terms of legal regulation, one of ZK's biggest strengths is actually the cause of this legal regulation. Because with ZKs, you are able to prove your data, yet it's anonymous. So the dApps and the decentralized applications, they actually don't know anything about you. Now, if you think about it, all these Web2 companies, there's a reason why they know everything about you. It's because when the government has to investigate something, they can just come and request all this user data to help in their investigation. But obviously, a decentralized application, it can't comply with that because it doesn't have the data in the first place. So I think it'll be interesting in the future to see what kind of legal framework comes out of this, and to see like what if there is a minimum amount of data that needs to be shared publicly, and other forms of data that can be kept secret and still anonymous.
I think to add on to Dimitri and Marco point will be last few months I was in this event like Token 049, where one of the speakers is Franklin Templeton fund manager. So as Franklin Templeton is one of the biggest fund manager in the world. So basically what he was saying is the fact that traditional finance market cap is $100 trillion, over $100 trillion, whereas the crypto market overall is still in the low $1 trillion. So the fact that there is a huge gap between the traditional finance and the crypto industry, the US government doesn't see it yet as like a big thing yet. So that's why they are actually not so harsh and pushing the legal and the compliance thing, especially with the ZKP new technology. I think they haven't catch up their legal and the compliance structure. How do they going to like put like a proper compliance legal standard for all these ZKP players, such as let's say Polygon ID and how does the on-chain reputation will be built? So this hasn't been regulated so properly. But I would say in the next couple of years, when the like ZKP as well as the crypto industry more maturing in general, then the government, especially the US, they will step in and put more regulations and compliance.
Got it. So just for everybody's information, Prepare your questions. We're going to wrap this up pretty soon with 2 more questions that are looking forward into what's possible in the next couple of years. The first question is actually directed to Kevin. What sort of projects, ZK projects, that you are personally most excited about, and why so?
Yeah, honestly, like one of the most interested project that I am bullish is Polygon. I feel like they are actually building like a proper and a lot of infrastructure in a lot of DeFi area. For example, they have ZK EVM to actually run a ZKP knowledge and then give the validity proof and transaction data back to the mainnet to secure the transaction as well as the data. And then they also have ZK Validium, which will actually replace the POS, Polygon current POS staking. What they will actually do is replace the POS system to ZK Validium. A simple way to say this is instead of sending the transaction detail back to the mainnet, what they will do is they will just send the ZK proof without the data. So you can say they are actually keeping the data on the ZK Validium itself, and then we're just sending the proof, which is very cost efficient and very fast. And then one project that I think I'm also interested in is related to decentralized identity, which is a Polygon ID. They are basically making an infrastructure for builders like us to build decentralized applications that is able to have the decentralized identity factors, which is important. Yeah, I think one of the very good example that has been mentioned is the on-chain borrowing and lending system, where you need a proper on-chain reputation to actually prove that you are able to pay, and then you are having this amount of, like, let's say, income and so on and so forth.
Got it. And my last question is actually for you, Dimitri. As a co-founder yourself, how do you see ZK technology and decentralized identity affecting the roadmap of your product?
Right. So I think just to bring the project back, one of our previous iterations involved tokenizing future income streams as NFTs that can then be sold for a loan. Now, if you think about it, as a lender, it's pretty sketchy to just loan money to a 0x address that does not have any other attributes. So we tried several ways to solve this, and all those ways were very manual, and they were very labor intensive because you would need to analyze the profile of the borrower. But the only reason for this is because there isn't today a decentralized identity platform that smart contracts can hook into. But in the future, once this becomes available, we can start to see more different kinds of decentralized applications that can write self-governing code that defines a set of conditions that hook into these decentralized identity platforms. And this will just create more capital efficient systems where borrowers are able to instantaneously get loans and allow these dApps to scale as well.
Got it. Well, that's about it for today's. That's all that you'll be hearing from us. We are now going to open the floor to questions. Please feel free to fire us with questions about this very interesting topic. And yeah, go on. Oh, and of course, please give a round of applause for both of our panelists. Thank you so much.
Hey, GM. I got a question. Where do you think the ZK proof for DID implemented? Should it be like baked into like the protocols, or like should it be separated for the ZK proof? Like,
do you guys need him to repeat that questions, or yeah? If you can speak closer to the microphone.
Oh, yeah, sorry, my bad. Where do you think the ZK proof for DID implemented? Should it be baked into the protocol itself, or should it be like separated?
I think that, to keep with the spirit and ethos of blockchain, we should implement most of the verifying logic on-chain, because that is like the only layer that's fully trustless. But I think we can come up with solutions that can integrate both off-chain and on-chain solutions. So we can do things off-chain, but at the end of the day, we still need to be able to verify on-chain.
Yeah, I think to add on to that question is using ZKP, you will be able to having like the privacy setting, right? So I think it's very important for like a lot of user, the privacy thing, especially for normal Web2 user. I think usually they worry about the privacy, like knowing the wallet balance account is not a cold thing. Like it's not a very funny thing. Let's say you transfer your money right now to your friend address, right? Then your friend's address will exactly know what you're transacting with, what kind of money that you have. I think that's a very not a cool thing. So with ZKP, it's enabling us to actually have the comfort of privacy, which we sort of have in the Web2 world. In the banking industry, you are in charge of all our money in the banks, right? So with the ZKP, now you will be able to have the comfort of that privacy setting in the banks while being a decentralized identity, meaning there is no central authority, no central banks that will control your money, and you will still be able to transact, interact with all the dApps that you wanted with privacy.
Any other questions for our panelists? Seems like there's one at the back.
Okay, thank you for the chance. I want to ask something. If in zero knowledge proof, it requires like a lot of computation, and because zero knowledge proof, like using some cryptographic, right? But I want to ask your opinion about how do you ensure the price of transaction in zero knowledge proof based blockchain is not more cheaper than using not zero knowledge proof, or do you have another like solution to reduce the gas price? Because a complex computation it means require more gas to spend. Thank you.
Yeah. So I think that you're totally right. Complex computations cost extra gas, and we need to be able to keep gas under control if we want to be able to scale the system. So I think one way to solve that is to be able to perform these computations off-chain, but only store the proofs on-chain. And by only storing proofs, all we're really storing is these small, tiny bits of data, which are a lot cheaper than storing like large transaction data.
Yeah, I think to add on Dimitri's point is you have basically two use cases in DeFi, I would say. The first one will be a high-value DeFi transaction. Let's say you are talking about decentralized exchange, such as a PancakeSwap, Uniswap V3. These are like heavily related to money, right? So it's important. So with ZK, you have options to put the transaction data back, but it will, like Dimitri's rate, it will actually cost you more money to do so, right? So you need to weigh the options. And then the second use case is when you are talking about use case such as gaming, like decentralized exchange gaming, social apps, where the transaction data, it doesn't, the transaction data information doesn't really important. So in this case, what the best thing I would say is a ZK Validium, where you keep the transaction data off-chain and you just put the proof on-chain. In this way, it will expedite the process and it will actually lower down the gas fee a lot more. And I think if you are interested about ZK, latest ZK knowledge, I think you can take a look of ZK Snark as well as ZK Start, which is like one of the biggest technical revolution in the ZKP knowledge. Yeah.
All right. Any other question? Maybe we have time for one more from the guests. All right. If that's the case, would like to say thank you to everyone. We're going to wrap up the panel, and please once again give a round of applause for our guests.
All right, one more round of applause for everyone involved, for all 6 moderators and panelists. So yeah, that's all the sessions we have today. thankfully, right? I'm just kidding. But we do have time till 9 p.m. To network and to just get to know each other, ask some geeky questions to other developers. And yeah, we hope that you really enjoyed our experience today, our session today. And once again, I want to thank our sponsors, which is Saison Capital, Brimo, and also AWS. That's it for today. I just want to wrap it up. Thank you for being here and hope you guys enjoy our BUIDLRS Lounge. See you on the next iteration, which will be in January. So stay tuned for that. We'll definitely push you an email to let you know if our next iteration is coming around. January. Thank you so much. Have a good night.